and welcome to Market Week in Review for the week ending May 3rd, 2024. I'm your host, Michelle Bajargal, and today I'm joined by our Chief Investment Strategist, Paul Eidelman. Paul, welcome.
Yeah, thanks, Michelle.
Let's begin our conversation with interest rates. Investors were focused on Wednesday on FOMC's interest rate decision and Fed Chair Powell's press conference. So what are the key takeaways that you can highlight for us?
Yeah, I mean, as a general rule, the Fed doesn't like to surprise financial markets on decision day, and they didn't surprise markets on Wednesday. They left interest rates unchanged, which was widely expected. I think most of the focus from the investment community was on how Chair Powell and the Fed have been processing the recent inflation data, because over the course of the first quarter, the numbers have generally come in hotter than expectations, and that has caused a repricing out of expectations around Fed interest rate cuts. And so I think Powell commented on two things, which were generally speaking expected. But first, he kind of said with this hotter inflation data, that's been disappointing, and it will likely take them longer to build confidence to cut interest rates. Think about the timing of the first rate cut being pushed out. But he also did say that he doesn't think the Fed will need to hike interest rates again either, that the current setting is restrictive enough to bring inflation down over time. So I think both of those messages were widely expected, but it was encouraging to see Powell reinforce those during the meeting. I think for investors going forward, an interesting observation would be that the Fed is just really data dependent right now around what they're ultimately going to do with policy. If inflation comes down, they'll probably eventually cut. If it doesn't, we're going to be in a higher for longer interest rate regime going forward. Our expectation and baseline is that the inflation figures in the United States are likely to moderate over the course of 2024. And if that forecast is right, we think the Fed can still start cutting interest rates in September. But again, what happens to inflation is really going to be critical for that outcome. The final point that I would just make is markets were very volatile intraday on Wednesday, hinging on pretty much every word that Powell was saying in the press conference. We saw big moves up and down, both on equity markets and Treasury yields. And I would give a shout out to our trading desk and transition management team. They kind of penciled and called out May 1st as a potential volatility date for our institutional investors, both because of the event risk from the Fed and also an expectation that liquidity conditions were likely to be relatively light around the end of the month and with the May Day holiday. And having that awareness and discipline around potential market volatility is quite important around some of those fund flows and activity for institutional investors to avoid taking sort of uncompensated risk, if you will. So I think they really did an excellent job managing that.
Great. Well, pivoting a little bit, so this is earnings season. We're well into first quarter of earnings seasons. What are the key observations that you have there? How do the results compare to market expectations?
Yeah, generally speaking, the earnings results have come in pretty strong globally. In the United States, we got off to a rockier start where some of the big banks were underwhelming, but I'd say the picture has brightened as the results have rolled in throughout the first quarter here. For the first quarter as a whole, we're now tracking high single-digit earnings growth for the S&P 500 index, which is a positive surprise relative to market expectations, and also just a pretty healthy fundamental growth rate for the corporate sector, and that's encouraging to see. I'd say another positive is what management teams are saying about the future as they're providing guidance into the second quarter. Generally speaking, those numbers look like they're in line with or arguably a little bit above consensus expectations as well. And that's obviously quite important for financial markets, which are always sort of forward-looking as well. So I think the picture looks pretty positive in the United States from a fundamental perspective. Globally, that's true as well. In Europe, we're also in the mix of things now, and there's a positive skew, if you will, to corporate results in Europe too, where most companies are surprising to the upside. And even in Asia, some of the big companies like Samsung beat on their earnings expectations this week. So generally speaking, a strong picture from the corporate earnings front so far.
Great. Well, thank you for sharing your insights, and thank you for tuning in. We'll be back next week.
Hi, I'm I'm Sophie Antel-Gibert, Head of Portfolio and Business Consulting at Russell Investments. If you liked what you just saw and heard, consider subscribing to our YouTube channel or check us out on LinkedIn. Thanks for tuning in.